Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening. Good evening. Good evening to everybody. What's going on, man? How y'all doing? How's everybody doing today? See who we got up in here. Oh, before that, I got this YouTube on. It's echoing in my ears. It's going crazy. I'm going crazy. Excuse me. I just woke up not too long ago. Had to take me a quick nappity nap. Now, good evening. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, I'm not the man of steel. My name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just being Big Spider, if you know hablo español, right? And you're now in tune to another episode of the Intraday Price Action Recap. This episode, just like every other episode, is being brought to you by the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? You keep talking about the Smart Money Manuscript. The Smart Money Manuscript is your one-stop shop for all things trading and investing. It's $69.99. First link in the description below. You can purchase it there. It has stuff about budgeting, banking, retirement, trading, options, trading, futures, using ICT concepts. It goes from being the beginning. Tim, what is a stock? What is a candle? All the way through the very complicated and detailed ICT concepts, right? So, hey, man, go check it out. And not only that, you get a Smart Money Mentorship with it. Also comes with that $69.99. What's the Smart Money Mentorship? It's when we meet every second Saturday at 12 p.m. Eastern Standard Time, and I answer your hard-hitting questions. Now, where else can you find that for $69.99? I don't know of any course that costs $69.99 that provides the value that the Smart Money Manuscript provides you. And I don't know of any mentorship where you just pay $69 one time and you can meet with the creator, the mentor, the guru, whatever you want to call it, every month to get your hard-hitting questions answered. I don't know what they're doing that at. I don't know what they're doing that at. I don't know. I know what I'm doing. I'm gonna start charging $5,000. That's what I'm gonna do. Y'all, if y'all think I should start charging $5,000 for far less, I ain't gonna say far less, just $5,000 for the same stuff, right? Because other people charge $5,000, $10,000, and I feel like it because I've paid money for courses. I've paid, and what you get for the Smart Money Manuscript, I ain't never get that before, right? No matter how much I paid money for courses. I paid a lot of money for courses. I'd have paid a few hundred. I'd have paid several thousand. I'd have paid 1,000. I'd have paid money for courses. If y'all think I should start charging $5,000, all right, raise your hand. Raise your hand. If you think I should start charging $5,000, raise your hand. Put your hand up high.
No, thank you.
What you say? No, thank you. What you say? Lump raised his hand. Lump said I should start charging $5,000. Lump said I should start charging $5,000. How about you, Jim? Rhonda, what you think? What you think, Rhonda? Light skinned Deborah in here. Let me, Deborah, you with my dog? You with my dog?
I have to make a payment plan on that one.
You with my dog, Deborah?
Yeah, I would have to do Afterpay or something,
What's Sherwin at?
Oh, he's gone.
Sherwin gone? Oh man.
Yeah.
I already knew what Sherwin gonna say. Sherwin gonna be like, around your gun day. Yeah. Go ahead.
Exactly.
All right, man. Shout out to everybody that's in here. We got light skinned Deborah in here today. We got shout out G Ferg. I ain't seen G Ferg in a month of Sundays, man. Shout out G Ferg in here. We got Jada in here. Jada trying to put hers on DPP. Who know what DPP is? If you was ever in the military or around somebody in the military, do you know what DPP is? Jada trying to buy her mentorship on DPP. Who know if you know what DPP is? Put your hand in the air. Shout out Jim up in here. We got Joe up in here. We got Lump up in here. We got Rhonda up in here. We got Hit, Learn, and Share up in here. We got Kim. We got Honey. We got Tish up in here. Never heard of DPP? Has anybody heard of DPP? Ain't nobody here prior military?
Is that deferred payment plan? What is
that? Yes, deferred payment plan.
Oh.
DPP, it was a card that you used to get in the military. And it's like, I think later they started calling it the Star Card. I think like but back when I joined the military, it was called the DPP. It was just called DPP. It was a plan, and you could go to it was a credit card pretty much, because you can go to the AFES and buy stuff, and it was a deferred payment plan. It was just a credit card, but they used to call it DPP. And then later, I think they changed it to the Star Card. They started calling it the Star Card, I think. But boy, look at here, Joe Snuffy. Joe Snuffy used to run up some DPP. Now, I ain't never got into like a whole bunch of trouble with the DPP. Right now, I use DPP. I put some stuff, I went and got some stuff, like, needed some stuff for my uniforms. You know what I'm saying? Want to get like 3 or 4 new BDU sets, and it wasn't like clothing allowance time. You know what I'm saying? Want to get some new BDU sets or something like that. Put some new, or I want to get some of them new jump boots that came out. I never liked them jump boots. It was the one like the soft sides on them. But if you want to give me some new boots or some DPP, you know what I'm saying? But I ain't never get in trouble. Boy, I had some partners. Whoo, them boys had to go. Them boys was getting Article 15s behind DPP. They was getting, who know what the Article 15 is? Y'all know what the Article 15 is? Article 15 is like when you get in trouble. They have different grades. You can get a company grade, field grade. You can get what's the one? You got something, company, and field. A summarized Article 15, that was like a slap on the wrist. That was like you got rolled up. You was getting rolled up. You got punishment, but you didn't lose no rank. You didn't lose no money. Then you got like a company grade Article 15 where you could lose money and lose rank and be like on restricted duty. You know what I'm saying? And then you got a field grade where that was the worst, right? It was like automatic loss rank, automatic restricted duty, you know what I'm saying? Longer like periods of time when you was in trouble, right? But summarize, like your company commander could give those, company grade, your company commander can give those, but field grade is like your battalion commander or higher had to give those. They, you know what I'm saying? But Jokers was getting fully realized field grade Article 15s behind DPP, boy. Them boy, hey, y'all thought them boys in Atlanta with the credit card scams was bad. Whoo, Joe Snuffy with that DPP. Boy, them boys were going ham on DPP. You feel me? Scams McGee out there. Them jokers was out there buying stuff on DPP and selling it to the Germans. And then when we was overseas, golly, what did they call rations? Ration cards. Oh my goodness. When I was in Germany, they had what they was called ration cards. Ration cards were because of the like cola. Cola is cost of living allowance, right? Because of cola in the other country, ration cards gave you money. Well, they gave not money, but they gave you the ability to go and buy tobacco and alcohol, right? Because when you was over in Germany, for some reason, they limited the amount of liquor and alcohol you can buy on a monthly basis. I don't know why, right? I don't know why. They limited the amount that you can buy on a monthly basis. So for people like myself that didn't smoke, right? People used to try to buy my ration cards. You know what I'm saying? They used to try to buy my ration card. And then like for people who, like if you didn't smoke or drink, they really was trying to get, you know what I'm saying, get like, if you was dumb enough, just say you're a female or you a dude that's single, and then you got a
Wait a
female.
minute now. You
Huh?
said if you were dumb enough, like
Yeah,
if you
yeah.
were a
I'm saying
female, I ain't like the way you said that sentence.
you ain't even listen to you ain't even hear what I finished saying. I said if you
Okay.
was a female or if you was a dude that was single and there was a female hustler or a dude hustler, they would talk you out of your ration card because they would get you, because you don't smoke or drink, and they would get you to buy liquor and alcohol off of your ration card for them, because you got the rations, you got the ration
Right.
card even if you didn't smoke or drink. So the hustlers and then the Germans, they couldn't get like like American cigarettes. but they wanted American cigarettes, and they couldn't get American cigarettes on the economy. So, boy, look at here. When I tell you Newports, Marlboro, Newports, that boy, you can make money off Newports over there in Germany. Hennessy, Remy, Hennessy, Remy, Absolute. These were the alcohols that was top tier, high value. And you could get like the Hennessy, the Remy, the Absolute. You can get all of this pretty much dirt cheap at the class 6, at the class 6 in the PX. And so when I tell you, people's over there making, now you got in a lot of trouble for selling it to the Germans. So it was like a black market type thing. But boy, look at here. And them ones that was smooth, it was this one female, we used to call her Queen Bee. She was gay, by the way. We used to call her Queen Bee. Queen Bee had so many dudes giving her, now she wasn't, they were buying the liquor and alcohol with their own money, giving it to her, and then she was selling it to the Germans. And she was gay. But so many of them had the hopes that they could be the one to turn her. They could be the one to switch her. Queen Bee, that she probably made the most money out of anybody I know while I was in Germany. She had that thing running like clockwork. Her little gay girlfriends, they had that thing jumping like the Carter. When I was in Darmstadt, oh man, over there in the 600 building, man, she had that thing running like the Carter. Nah, you couldn't get cash value. You couldn't get cash value if you didn't smoke or drink. It was that's just what it was for. You got liter coupons, and you got cigarette coupons, and you got liquor coupons. Liter coupons were if you wanted to fill up your tank off post, like if you wasn't on post, and so instead of paying with cash, right? You just put how many liters you put in your car. You just tore off that many liter coupons and gave it to the cashier, right? But you couldn't use the ration cards for the alcohol and the liquor off post. You could only do that on post. So the liter coupons was for off post on the economy using gas. And then the separate rations, the ration cards, separate rations was like the money you got paid for food. The ration cards, you can only use that on post. And you had so many liters and so many cartons. So I think you can get like 3 cartons a month. It was either 3 or 4 cartons a month for cigarettes. But let me see. Whatever it was, I felt like it was a lot. I said, man, who's smoking that many cigarettes? Whatever it was a lot. I think it was either 3 or 4 cartons of cigarettes a month was the amount that you could get. And you can only get so many liters of liquor per month. I can't remember what the amount of liters, but you know what I'm saying? Man, Queen Bee had a thing running like the Carter. And I get it. I know why everybody wanted to be the one to turn Queen Bee, because Queen Bee was beautiful. When I say this was the prettiest, most cocoa brown skin, just, oh my goodness. You remember that old Commodore song? Oh, she's a brick house. Man, Queen Bee was so beautiful and so fine. But boy, look at here.
Sound like something out of my old stables, man, but go ahead. Yeah, no.
I'm trying to figure. I can't remember where Queen Bee was from. I can't remember Queen Bee real name.
Is the statute of limitations up on that? You done told Queen Bee whole operation.
Hey, Queen, hey, Big, you can't. You can't go back on it. You can't go. You got to be able to go back and build a case without government names. Ain't nothing gonna stick. You can't. The only queen bee they gonna be able to get for that is Lil' Kim. Oh, you want to bumble with the bee? Oh. Hey man, did Price do anything today that caught y'all off guard? Did Price do anything that caught you off guard? Is this our first stream of the new year?
Yep.
This our first stream of the new year? Oh man, happy new year to everybody, man. Happy new year. I didn't even make a new year banner. Y'all remember what year that was? Was that 2024 when I made the banner when we was making the leap? We was making the leap and was like,
Oh yeah.
Was,
I don't remember what year, but I do remember the
making the leap.
Making the leap. Yeah.
That probably was coming into 25. I remember that too, though.
Yeah, I ain't make a New Year's banner. I'm sorry, y'all, man. But happy New Year! My dear brother Noopsy. That boy. Oh, that boy got a few headshots. My son went to the gun range. Him and his friend went to the gun range. He just sent me his target. He just sent me a picture of his target. That boy all over the target. Oh, that boy got a few misses. That boy missed bad a few times. Wait a minute. Who's who?
What type of gun he ran?
I'm about to see that. Who's who? That boy, that.
This is his first time, though, ain't it?
Yeah. What there? Which one was you?
Hello?
Which one was you? Which one was you and which one was seen?
No, both of them were mine. I sent you both. I sent him mine now.
Oh, both of them was yours?
I'm gonna show you mine right now. Hold on. I'm gonna show you that's the same poster. That's just
you just went multiple times.
Yeah, so one round and then the second picture was when I shot some more, but that's seen.
I can't hardly see Sim. Oh, Sim can't shoot at all. Sim, you need to go into the military, Sim. You need to go into the military. That boy. Sim. You shot. What? How many clips y'all had?
We both shot 100 rounds, didn't it? Yeah, we did. Yeah, we both shot 100 rounds.
Out of 100 rounds, I saw 10 shots in that. You hit it 10 times, see?
Man, bro, this is my fiance. This is what Akira did. She shot like 14.
She shot 14 times and hit him 4 times?
No, it's a decent amount. More than the bottom.
Oh, at the bottom. Oh, so she taking nut shots.
It's cursing to people. So she probably shot one clip. That's how I look. Yeah, you said 14? Yeah, she shot one clip.
Your old lady shoot better than you, Sing.
Oh my goodness. Bro, everybody that he shows that bet is both white did hit.
Your old lady shoot better than you, Sing. Hey, Timothy.
Mine look better because it was through the whole body. Like
Timothy, if it ever go down, do not go get Sing. Do not go get Sing.
He only send the warning shots. He
the warning shots. Sing is Arsenio Hall on Friday on Harlem Nights. The same as Arsenio Hall on Harlem Nights.
When I moved it up to like walk them down range, and I shot good. I got videos. Let me see all the videos.
So you in close proximity missing like that. Oh my God. Oh my God.
That's the one that was further back. When Tim was missing, he was missing the whole target. Okay, I showed y'all. It was that bad. You could tell.
Yeah, it's real bad. That's real bad. What kind of gun did y'all rent?
I had a 19. Glock 19. He had it was like I had a 10-5. No. You didn't. Oh yeah, you switched it out. Yeah, because we both had one with an optic. I had a Gen 5.
You had a Gen 5 and was missing like that?
With the optic.
Oh my God.
Not with the optic.
Oh my God, you are horrible.
It was on his side.
What did Kira have?
He just shot what she shot pretty good. She shot a full clip. I'll show you what she had. She shot the same gun I shot.
I'm saying,
the same one he had. She shot the same gun I shot.
Oh, okay.
So Tempted shot with a 19 and you shot with a Gen 5 and you missed everything.
Yeah, it was a 40. It was a 43, I think. Yeah. I forgot. I shot good. I truly felt like if somebody was to walk up on me, they're dead. Well, yeah, I mean, not that hard.
If they walk up
My
on you, they
mama
dead.
always say if you pull out a gun, be prepared to take them out. So you gotta be sure.
Pure headshots. I had
Pure what? Pure paper shots.
Pure what?
Pure paper shots. So Tempted had a Glock 19 and Jen had a Glock. I mean, Sim had a Glock 40.
Yeah, I made somebody dance for sure.
There you go.
So which one was more comfortable shooting, the 19 or the 40 caliber?
No, I only shot the 40. The 19 the whole time. I just kept. So we both rented pistols, and we bought the ammo. And at first, I thought I was gonna shoot 19. I was like, well, no, I went the 19, Glock 19, and that's what I shot the whole time. But I got the paper spread out in the back. Hold on, this is gonna flip.
So I was gonna say the first shot is that one to the right. Is that the first one?
This one way up here. That's the first time I shot.
I thought that one at first, but then I saw the second sheet, so I thought one was yours and one was Nasim's.
No. So there's two pictures because we had 50 shots, and I was like, oh yeah, that was too quick. That was fun. So we got another, and the second picture is this whole paper. So I only shot one paper the whole time.
So y'all in there acting like y'all got a switch. Y'all want taking your time. Y'all just know pop, 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 real fast.
What you do?
Hey, I'm on live, so I'll look at the videos when you get home.
All right.
We're gonna talk some more, but I got the videos. I'm gonna show you the video. I was not letting it rip. I just bow. Yes, you was.
Were you breathing?
Nasim like he had a switch because Nasim ain't hit nothing on the target.
I got the video. He was letting it go. I got the video. He was letting it go.
Nasim, hey, he had no aim.
No. I'm about to it was one video where I let it, but everything else was like some real life. This is him. This is us.
Did Price do anything today that made you say?
Anyway, I'm funny to get. I'll look at him when you get home, Woody. I done got caught up. Y'all drive safe. I'll see you when you get here. Love you. Sorry about that, y'all. I had to got caught up. I had to forgot I was on live. Hey man, I don't see nothing in the chat, so I'm assuming Price ain't do nothing that surprised nobody today. Now that we done separated the squirrel, now that we done separated the wheat from the tail. Hold on, I had turned my heater up because it was cold in here. When I wake up, I'll be cold, and then it's too hot now, so I got to turn this heater down. Man, it's Georgia weather crazy, man. Like I wake up in the morning and it's like 28 degrees outside. And then when I get ready to go to the gym, it might be like 35, 40. And then when I get done at the gym, it'd be like 60 degrees. This weather crazy, man. Let's go ahead and look at the whole week, man. Since y'all were so gracious to sit with me. Well, this is today, right? This is what Lil Timmy Rogers was watching on the day, right? As y'all can see, overnight, price was parabolic to the upside, right? And last night, I was in here practicing, like just practicing and trying to come up with some stuff that I wanna touch on inside of the Magical Fibonacci tool course that I'm gonna be putting together. And I popped up on hold it, phone. Is that Valdez in the building? Hold it, phone. Is that Valdez in the building? If y'all don't know who Valdez is Throwback Gang Gang. Valdez is Throwback Gang Gang. Valdez, Miss Valdez, Lil Valdez 1, Lil Valdez 2, I only know about Lil Valdez 1 and Lil Valdez 2. I don't know if it's more Lil Valdez is running around there now. But Valdez throwback gang. Throwback. Back when we used to sing, Spiley, where you at, baby? Here I go. Who remember that? Who remember Spiley? Who remember Spiley? And somebody was asking the other day about what I used to trade, and it was that spy. That's where it comes. Spy, the Spider Gang, everything comes from the spy. 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 Squirrel done messed me up. Where was that? Price went like parabolic overnight. Oh yeah. And I pulled up and I was practicing some stuff that I want to touch on for the magical Fibonacci tool. The kids will be happy for the magical Fibonacci tool. And I pulled up and did like a quick little pop-up because I was recording the video. Man, I tell y'all, I was sitting there recording and talking my behind off. And by 15 minutes into it, I realized I wasn't recording nothing. So I started recording, and then I ended up doing like a quick little pop-up last night, and I just played the clip of what I was doing, right? I played the clip of what I was doing and what I was talking about, right? For those who, if you was able to tap into that last night, if you pulled up and tapped into that last night, I know light-skinned Deborah wasn't there, but everybody that was there, if you found value in it, if you found that helpful, you know what I'm saying, put a 1 in the chat, or just say, yeah, that was cool. It was a nice refresher, or I learned something, or whatever it is, you know what I'm saying, whatever it is, right? And yeah, that's what you missed. You missed it, right? So I felt like it was pretty good. I think it was a pretty good, quick little pop-up, right? We talked about a couple things. I can't never just talk about one thing, right? I can't never just talk about one thing, right? So when I start talking about something, it's like I kind of get on a roll because that's how it is. It's like a web. You know, when you walk into a web, you just start getting like just stuck in all through the web. That's just how it is, right? So now this is what I was watching today, because last night price was going parabolic to the upside. And so as we came into the open, right, I was watching these relative equal highs as internal buy side liquidity, and this high right there, right, as the target, right? And who remember what I said about this high right here last night based off of a certain time frame? For those that was on there last night, right? Let me see. When did I pop up on there last night? What time was that? Who remember? What time was that?
It was 8:36.
It was 8. Okay. So let me see here. This is the 9 o'clock candle. So price was around here somewhere. Some price was somewhere around here, right? Who remember what I said about this high right there? And it had something to do with a certain time frame. Who remember? Who was on there? Who was on there? Who was on there? I know some of y'all jokers was on there. Don't be trying to act quiet now.
I know it was the high of that range, and if we were looking for either a retracement or to go attack that, because that's the last high that sent us down to sweep liquidity.
Okay, I'll take that. You kind of danced around it, but I'll take that. Right? You ain't give me exactly what I wanted, but based on we was running our Fibonacci's, right?
Yeah.
And we was talking about projections, and we was always also talking about dealing ranges and stuff like that. And we were saying it was a certain point inside the dealing range that we was looking for price to come back up to at a minimum, because we were down here in a discount of the range, right? And based off being in a sale program, we wanted to see it come back to a certain point at a minimum for two different reasons. One was because it was in a premium. Two was because of the fib projections, right? So it was two, we was using the magical Fibonacci tool in two different ways, right? And then we talked about, let's go down to, let me do this right here. We said it was 8:30, so I'm gonna knock off this hourly candle right there at 9 o'clock, right? And then we're gonna go down to a 15-minute chart first, right? We're gonna go down to a 15-minute chart first, right? And then we're gonna highlight that SIBI right there. Yes, we're gonna highlight that SIBI there, because I think that's 15-minute SIBI we had highlighted. Yes, because that's in the premium. That SIBI is in the premium, right? So that 15-minute SIBI, right? And based off our projections, we had a certain point that we was looking for price to go to at a minimum. All right. And this right here is at the close of the 8 o'clock candle, right? So all of this is during the time. They said it was 8:30 when we pulled up. So all this is during the time. And as you can see, right? As you can see, based off of what was, matter of fact, I'm not going to play the video because you had to be there, but I'm going to just go to the video and I'm going to look at what I have marked out.
And I'm going to tell y'all that I thought
Right there. So as we see here, that's an hourly fair value gap that we had marked out, because I didn't have the 15-minute marked out. We had an hourly fair value gap marked out, right? And then we had a 5-minute fair value gap marked out right here, right? And then this 5-minute fair value gap at this little liquidity level, at that deviation level, was the minimum that we were requiring price to come to before we saw any type of desire to make a deeper retracement, right? Right. Everybody that was on that, do you all agree? Is that's what we said? That's what was talked about, right? Yes, no, maybe so.
Yes, we were talking about coming to like that 1.5 level
Yeah, right.
at a minimum. Yeah.
At a minimum. Okay. Now, during the time while we was talking, what do I always say? I say, don't try to force a reversal just because it comes to a point where you expect it to, or just because you feel like it has gone very far. Because if it hasn't swept liquidity, right, we can't be considering any type of retracement or reversal is going to be very meaningful, because it hasn't swept liquidity. And when it comes to liquidity, you want to see the liquidity that's resting on all the time frames. And so while price was moving, it was stated that although, let's go back to 60-minute, right? Because we had the 60-minute marked out. That's the 60-minute we had marked out right there, I'm assuming. So that's around 25. Yes. So that's the 60-minute. Right. 25, 72, 25. Yes. Yes, that's the 60-minute we had marked out right there. And then we had a 5-minute marked out right here. Okay. 5-minute marked out right there. And then that's the liquidity, right, where that we was looking for at a minimum, right? That was at a minimum. That's what we wanted. That's the liquidity we wanted at a minimum. Okay. And because that's our current, that's our latest, right? Our latest expansion from our overall dealing range right there. That's why we was looking for that liquidity at this 5-minute fair value gap based off of a fiat projection, right? From an intermediate term low, right? And so we said, because the hourly time frame, let's go back to that 5-minute, because the hourly time frame has liquidity right here, right? The hourly time frame has liquidity right there. And then there was another fair value gap somewhere where we had liquidity inside of it. Oh, that's it right there. All right. Okay. All right. So it's much higher. It's much higher. It's much higher. I don't remember what we marked out. But whatever it was much higher. I'm just kind of eyeballing it here. I'm just kind of eyeballing it there. Up here. Because it said 60 minutes. Was it here? No, it's not that. Maybe it was something on the 15-minute, but it's just marked wrong. Let's try that. Right there. I think that's it. I think it was on the 15-minute, but just marked wrong. Y'all know this gonna drive me crazy.
Or you could just play the video.
No, the video ain't got what I'm talking about.
Oh.
The video don't have what I'm talking about. Because this is just something I was saying. This was something I was saying, but I done got caught up looking at something else now. Oh, you know what? That's why I'm so confused. Because I'm looking at the wrong bit of price. Am I? Yeah. Looking at the wrong bit of price. Yes. Y'all like, Tim, this ain't but you going through all that, and then what you about to say ain't even worth what you doing. I know. I can't help it. Y'all know how I get. Forget it. I'm frustrated now. Anyway, we said because the hourly time frame, because the hourly time frame had liquidity resting here, right? As price is in this buy program, right? Well, we look for price to come to at a minimum. Where we look for price to come to at a minimum. So, right. We're looking for price to come here at a minimum, right? Based off of our projections, right? We said we don't want to just, it's okay if you just sell as soon as it touches, but the imbalance is so big, right? And I can mark it out right based off what I was saying. The imbalance is so big, right? That, right? This is the imbalance right here from the 60-minute, right? And then there was a 5-minute imbalance here above this liquidity, okay? So on the 5-minute time frame, all right? So on the 5-minute time frame, right, we're taking liquidity and trading into a bearish fair value gap, right, in conjunction with a standard deviation from projection, because you can use the deviations as projections, okay? And you don't want to just short as soon as you get there. There's nothing wrong with it, but you have to understand the risk that you're taking on, right? And then we said, no matter where you hit on these deviations, right, this is the minimum we want to see it come to before we see any meaningful retracement. But we're taking out liquidity on a 5-minute time frame coming up to here, right? But we have more liquidity inside of an hourly fair value gap right here, which is taking you to right at equilibrium or fair value for our entire let me see, this is our entire range here. I want to get it right. Right there. So coming up here to the high of that hourly, you're taking out liquidity and coming right up to fair value for our entire range. Okay, so if the higher time frame is the one that's controlling the mic, the one that's in control, and you're trying to just go straight into shorts because we've come back to a premium based off sweeping liquidity for a lower time frame, right? then we want to be leery of that. You're not wrong, but then you just have to understand my risk has to be all the way up here to allow for price to make it back up inside this inefficiency at this fair value. You know what I'm saying? You got to understand my risk is going to be all the way up there if I'm entering down here on this hourly or down here on this 5-minute imbalance after this sweep of liquidity. But we also stated that the hourly has internal liquidity right here that it can come and sweep. And it also has liquidity here on the hourly. I mean, the hourly had internal liquidity there, and then the lower time frame had internal liquidity there. So this was the internal liquidity on the hourly. And if we go back to the hourly time frame, right, we can see that, right, we can see that we said that this right here, the hourly, right, could come all the way up and take out these highs here without invalidating this sell program, right? We could come up and take out that high. We could come up and take out that high without invalidating the sell program that we're in. All right. All right. That's what we said last night on the pop-up. Right. That's why when Yolanda was like, that's the low, I said, I could take that. You know what I'm saying? I take that. It wasn't worded exactly how we was talking about it, but I could take that. Right. So we was looking for that to be a potential reasonable target to sweep liquidity on the higher time frame. Even though we had mapped out these projections on the lower time frame, this right here was a reasonable target on the higher time frame. Right. And then if we look here, right, we already know the further you get away from where you project, right, the less accurate it's going to get. But if you look here, right, what do we always, which deviation do we target when it comes to looking for projections and targeting a deviation near a high or low, right? Do we look at this one here, or do we look at that one there when it comes to projecting? When you say, hey, this is the target that I want to go for.
Right? The one above?
Yes, this one here. The one just above or just below the liquidity, right? If we look for the one that's in the pool, right? The target is the one that's inside the liquidity pool. The liquidity pool is here. We're looking for the target, right? And as we see here, right, that target there, right, is above there, right, above that liquidity pool right there. And even though we're very far away, right, that's really extended, right, that's really extended from where we measured it, right, that's really extended from where we measured it. When we went above here for the first time, where did we go before it started pulling back? Right here to 9 standard deviations, right? This is 8.5, and this is 9 full standard deviations that it went to, right, before manipulating liquidity and giving a retracement back down here, right, to equilibrium, right? Because remember, that's equilibrium for, I mean, not equilibrium, the upper quadrant, right? That's the upper quadrant of yesterday's range, right? Upper quadrant of yesterday's range. So we traded outside of yesterday's range, right? And came back down to the upper quadrant after hitting 9 standard deviations away from where we projected. All right. And even though 9 standard deviations is a really far way to go, but you still can see, right, the accuracy of having a real target that you can shoot for, right? That one right there, one right above, right there, delivered it like gangbusters, right? this right here, that stop and pull back, that probably would have shook some people out. Oh, I just missed my target and now it's running away from me, right? But as you see, delivered it like gangbusters and even went up a full half standard deviation farther, right? But I was saying all of that to say is last night when we was talking about not trying to force the reversal without taking out liquidity first, where did it come to? That buy side liquidity on the hourly time frame, right? Where we said we can come and sweep this without invalidating that sale program. Went all the way up there and took it out, right? Before coming up here, like we said, before going up, right? Manipulating out some more buy side, then dropping down, right? The same thing it did here, right? Same thing it did here, where we came here, right? Came up, we came up to 9 standard deviations, manipulated out buy side, and then dropped down, right? We came, right? We came up to a certain point, right? Dropped down, manipulated out buy side. Well, just say it like this. We came up to a certain point, manipulated out buy side, and then dropped down. It's the same thing, the same concept. Coming to a point, manipulating buy side, then going down. Coming to a point, manipulating buy side, then going down. Right? It's the exact same thing. Just this is just like a smaller fractal of what we talk about overall right there. Okay. Right. And then once we took that liquidity, right? Once we took that liquidity there on the hourly time frame, all right, we took the liquidity, we set a high, we pulled back down, right? We went up, manipulated out that high and this high that took out 2 levels of liquidity, the high that we had just set and a high back over here, right? But we didn't make it to that high that I had marked out as buy side, because if price stayed bullish, I want to see a willingness to want to keep taking out buy side and moving up to that buy side. That's why and you see I got that marked out as internal liquidity. That's why it's got little dashes, and I got that marked out as my reasonable target. Same thing to the downside, right? Right. So when price broke down, right, my target down here was the internal liquidity, and this right here was my reasonable target for the downside. Right? And as you see here, we came down and hit the internal liquidity over here on the 1 p.m. candle, traded back up to the current new day opening gap, right? Don't know if it was going to go back down and get that or not, but we ran out of time, right? So based off what we talked about, it didn't reverse until it took a higher level of liquidity. All right. Until it took a higher level of liquidity. Now, wasn't looking for it to blast off to the moon. Why? Because the sale program that price was currently in, yes, we are in a buy program on the higher time frame. But the sell program that the intraday price action is currently in, right, is not invalidated until we take out that high up there. That's when the sell program is invalidated. So the whole time we was talking about coming to a certain level before we see any type of deeper retracement. All right. Mind you, remember last night we talked, we said I want to see it come this far before we see any meaningful retracement. All right. Meaning that we are in a sale program, but we are in a discount. So I want to see it come back up to a premium. And once it gets to a premium based off of this, and this, these are all the levels of, okay, I'm back in a premium. This is the lower time frame level. This is the intermediate time frame level. This is the higher time frame level. These are all the levels of, okay, we're back to a premium, right? And once we get back to a premium of once we get back to a premium of our overall dealing range, take out liquidity, set a high, get us a retracement back down into the fair value gap, come up, sweep that liquidity and sweep another level of liquidity, sweep 2 levels of liquidity, right? Don't take out the one that I was watching, right? And what else did it not touch? See this right here? It failed to get to that upper quadrant, right? That right there in itself is a signature that you watch, right? You watch that as a signature. It doesn't mean, right? Just like we talked about it before yesterday, I think. Like if you close above this, it doesn't mean, oh yeah, we're automatically going to the next one. Or if it don't make it there, it doesn't mean that we're automatically going back down. But like I said before, if it explores above there, it's showing a willingness to want to go further. So once it explores above here, I'm now watching on the lower time frame and this time frame, do the down close candles continue to support price once it explores above there? Do we continue to respect bullish order flow? If it does, then I have a reasonable target I can aim for because it's continuing to respect bullish order flow and we've shown a willingness to explore above that level. If it fails to get to that level, right now, I want to see, are we starting to respect bearish order flow on the lower time frames and this time frame? And so when we fail to get to that level, when we take out liquidity, right? And especially when we create a high, right, at an anticipatory reactionary point, that's a daily high, that's an anticipatory reactionary point, right? We interact with the high and create a short-term high, and then we come up and take out that short-term high and a higher time frame high and refuse to get to that quadrant level. Right now, at this point, I'm watching the lower time frames to see, do we start respecting bearish order flow, right? So we come here, right, and we're gonna come, right? That's when we reject it. So we're looking at the price section, right? We're looking at the price section, like this is the wick there, okay? All right, so this is an hourly chart. Let's just go down to a minute. We're gonna go down to a minute. All right, just so we can get more detail. Okay. So here we are. We came up here. We failed to get there. We already talked about, we took out the liquidity over it. Matter of fact, let's go back and mark out the liquidity that we took. All right, so thank you. That's the liquidity that we took out right there. I know it's a lot of lines on here, but hopefully y'all following along. All right, and we're just looking inside of that wick right there. Right. The reason why we're looking inside that wick is because from this is when that candle closed, when we rejected that level after trading into that liquidity. All right. So we want to pay close attention to what the algorithm is telling us, right? People ask, how do you see it in real time? This is how you see it in real time, by going back and studying price and being very, just fine tooth comb everything. All right. This is how you learn to see it in real time. So as we were trading up that hourly candle we was looking at, we came up, we took the liquidity, right there at 11 standard deviations, right? And then we closed, right? We poked above it and we closed inside the high. So we poked above it and we closed back in, right? So a little slight little rejection, nothing to write home to mama about, right? Poked up again, right? Failed to get the consequent encroachment of the wick, came down, right? Created a SIBI right here as we traded down, taking out that short-term low. All right. Right, created a SIBI as we came down, took out that short-term low. Right. Y'all notice all the signatures we getting so far, right? Traded up, right? Closed back inside of the high, right? We created a down close candle after trading into that high. Okay. Then we displaced away, create a fair value gap, and take out sell side liquidity. Okay. These are all signatures that we are seeing after taking out that high right there, right? At a whole number standard deviation, right? Then we come back in and we start engineering liquidity, right? We just consolidate in here, all right? And then this right here is when that hourly candle closes, okay? Now, since we hit that liquidity, has price been respecting bullish or bearish order flow? Since we touched that, before we even get into this candle right here, before we even get into that wick, since we touched that liquidity, has price been respecting bullish or bearish order flow on this 1 minute time frame?
Bearish.
It has switched from bullish to bearish order flow.
Mhm.
Right. It has switched to bullish to bearish order flow. Now, overall, it hasn't changed the higher time frame bias or anything. But since we've touched that liquidity, it starts showing signs that it's respecting bearish order flow. And it failed to get to that deviation level right there. So that upper quadrant, it failed to get to the upper quadrant, right? So since it failed to get to the upper quadrant and it has taken out a higher time frame liquidity, that was the swing high after taking out the daily high, right? When we came up, took out the daily high right there, traded back down, traded up, took out the short-term high, and took out a higher time frame high, and failed to get to the upper quadrant. Then it started respecting bearish order flow. Okay, once it started respecting bearish order flow, right, and you're up here in a premium, at an anticipatory reactionary point, right? Coming right over here, it's 10 a.m. Candle opens up, right? It's 10 a.m. Okay, let's come back here and do this right here. Let's do this right here. All right. We know what this box is right here. What this box represent right here.
Return
Macro.
on a macro.
Yes. That's our micro wonder right there. Right. That's our micro wonder. Okay. So what is a macro? A macro is an important segment of what? A macro is an important segment of what?
Of time.
Time.
A macro is an important segment of time, right? An anticipatory reactionary point, like buy-side liquidity pool, a quadrant level of a dealing range, a standard deviation of a projection, a fair value gap, if you will, anything like that. Anticipatory reactionary points. Anticipatory reactionary points are important pieces of what? So if a macro is important segment of time, an anticipatory reactionary point is an important level of what?
Price.
Price, right? So during this macro window right here, we have an important segment of time, an important piece of price. So what has happened right here? What happened right here in this little area right here?
Time met price.
Time met price. So when time met price, right, we got a signature of failing to reach that quadrant level. We got a signature of swiping liquidity because we got nothing right home to mama about, just a quick little reaction, whoop whoop, right, and failing to go back higher. And then we started respecting bearish order flow and got a 1 minute, right, 1 minute sweep of sell side liquidity there, right there, right. Came up, got a 1 minute sweep of sell side liquidity there. Nothing to write home to mama about. It's just 1 minute. And we created a bearish fair value gap right there at that sweep of liquidity right there. Right. So if we look here, right, we got a bearish fair value gap that's created inside this macro window right here. And then right here, we come into a new hour right there. And as we start off this new hour, price takes off to the upside, right? When it takes off to the upside, we take out a short-term high, right? We reprice this entire imbalance right there. And then the bodies, all of the bodies stay inside of the imbalance, right? And then we displace away again, creating another imbalance right there. So if you are not of the risk appetite to take a low risk short, right? Because once we come above, where does the smart money reversal happen? Above a high or below a low. So if you're not trying to take a smart money reversal, aka a turtle soup, right? AKA a turtle soup. If you look at this right here, right? And matter of fact, look at God. I was at the gym today and I didn't even know that Michael posted a video. I didn't even know he posted a video. I was trying to buy YouTube Premium, right? I was trying to buy YouTube Premium because I'm sick of ads, right? And I was trying to just click something, and I don't know what I clicked, but his video opened up and started playing. So I'm just letting it play while I'm trying to set everything up. And I heard him say something, right? And I didn't even finish watching the video. Right? I ain't even finished watching the video. Let me come over here. Let me show you here. I ain't finished watching the video, but I heard him say something, and I just saw it on this what's the name? What Will Smith crying about now? I just saw it on this I be looking at them boys spraying that candy. Oh, he did another video tonight. It's a I didn't know he did it. It's a 1 hour ago. It's a he streamed the video today.
Yeah, he streamed it as soon as the market closed.
Yeah, he
And
streamed
like
the
you
video.
said, what you saying is how he's talking about that important level of a turtle soup and dragging it out almost like a 20-day look back and dragging it out into a time so the algorithm will refer back to it. So it was just what you
Yeah.
saying, how we
See
just
right
did
there?
that. Yeah.
You see right there. You see this how far I looked at in the video right there.
We
Right?
can't
We
see it if
can't
you're
see
showing
it.
us.
Oh. Right. Let me see here. That you see, that's how far I let it go. But I was listening to him right there. See the little red thing there, right there. That's how far I looked at in the video. But I was listening to him, and he said the first imbalance after a turtle soup, pay attention to it. And I just thought about it when I'm sitting up here looking, because I said, I was like, if you're not into getting a turtle soup, and then I looked here, is that not the first imbalance after that turtle soup right there?
That's it.
Stop
That's it.
playing with me. Stop
That's
playing.
it.
I was just about to say, if you ain't into getting a low, because this is your low risk short. If I said, if you ain't into getting that low risk short, because that's the turtle soup, smart money reversal turtle soup, that's the first imbalance after that turtle soup right there, right? Price came down at 10 o'clock. What did it do? Trade back up into that first imbalance. And did I just say the first imbalance? What do I always talk about watching? That first imbalance that's created before you go do something, and we expecting that to be inversion fair value gap if we bullish. That's why I tell y'all, anytime Michael talk about something, you fine tooth comb it about everything. Whenever he talk about them first, you look at the first everything. And if it aligns with the narrative, pay attention to it. What do I always say? Know why am I putting this on the chart? I'm marking this fair value gap because it is this. If it's this, I expect price to do that when it comes back to it. Y'all can't tell me this stuff don't work. Y'all can't tell me this stuff don't work. And as we see there, after the turtle soup, the first imbalance that's we created at 10 o'clock, we already said it's starting to respect bearish order flow. After that signature, respecting bearish order flow, trade back up at 10 o'clock, right? If we're bearish, what do we want to see first? A manipulation of buy side, trade back above short-term high into that imbalance, displace away, creating another imbalance. And like I was saying, if you're not into the the low risk short, there's your opportunity right there, trading into, come here, that SIBI right there. Come here. Did you get it yet? Oh, my secret. That's SIBI right there. So again, if you're not into the low risk short, right, come here. Just a quick 2-minute distribution phase. Just 2 minutes. 1, 2, not even 2, because that's when we formed the fair value gap. 1, and then leave it, right? Then once we leave it, very few opportunities to participate in anything, right? Very few opportunity to participate in anything until we came all the way back down to, is that the daily low? What is that? Yeah, that's the daily low. Okay. No, that's not the daily low. No, daily low down there. What is that line? What is that for? Oh, that was that liquidity from before. That was like, get out of here, liquidity. Right? Right. Until it come all the way back down. Once it came back down, God dog it. Too much going on, man. Until it came back down and touched that hourly SIBI that we was watching the first time. Right? It came back down, touched that hourly SIBI, right? Retraced back up into that SIBI right there. Then one more time, traded back up, and then came back down. But this is what I want us to pay attention to while we're looking at this price right here. Right. Remember all of these, see all of these lines that we got on here? All of these lines are from a projection. Let me lock this. All of these lines are from our bullish projection from this intermediate term low down here. Right? Our projection from there. Right? So since we made that projection, when you're bullish, right, what do you want to see the algorithm do? Stair step up these quadrant levels as you're going up, right? Now, if we come back over here, once we get all the way up here, right, we come up here and we get ready to turn around, right, and we get ready to turn around like this right here. Isn't it funny that that SIBI was made on a quadrant, on a deviation level right there at a 10 standard deviations? This BISI was made there. This SIBI was made there, right? Is it this bearish order block was made there? This SIBI right there is in between two segments there in connection with a old high, right? That old high is a quadrant of a range, right? But it's in connection with those there, right? We got another SIBI here that's connected to those two, right? We got another SIBI here that's there. We got another SIBI here that's there. We got another SIBI here that's there and there, right? It's connected to those two. We got a bearish order block that's there. I wonder why the algorithm is making these PD arrays on these magical fib lines. That's peculiar. That's peculiar. I would have never thunk it. I would have never thunk it. I don't know. Might just be me. It might just be me. Might just be me. Now, this right here is this week's price action right here. Right, this is where we started at right there. This is our new week opening gap right there. And we started out last week. Santa Claus rally started out beautiful. Right? Santa Claus rally started out beautiful. Let's see. Why is that on? That's not from this week. Get out of here, you. What are you doing on Oh, I turned it on because we was dropping, and I was like, oh, that's a PD array down there. That's why I had that on. All right, so this was last week. This one we started last week. All right. Last week we traded up, dropped down, low to low, started to rally. Right. So we had our accumulation, manipulation, distribution, above high. Right. Looking beautiful. Santa Claus rally looking beautiful. Then this week right here, Phil said, ha, made you look. Phil said, hold on, boy. Santa who? Santa who? Santa what? Phil said, Santa what? Santa what? Santa what? You looking for a Santa Claus rally, huh? You say? How about this? Santa Claus D's. Santa Claus D's. Right? What we always talk about. There's always that level of manual manipulation. That's why we just watch the signatures and trade what we see. We don't try to force things based off our desires. Right? We looked at last year compared to this year, and we said, hey, the Santa Claus rally looks likely this year because we are in a buy program. We started out last week, which includes those last 5 days of December. They say the last 5 trading days of December through the first 2 trading days of January. Today was the first trading day of January, and then Monday will be the second trading day of January, right? So last week, the Santa Claus rally was looking beautiful, right? Because this right here would start around the last, because I think we said it was Tuesday, was it? Was it Tuesday? So 1, 2, 3, 4, 5. Yes, Tuesday. So Tuesday, this is Tuesday here, Tuesday in the morning. So Tuesday through Friday. I mean, Tuesday and Friday. I said Tuesday and Friday. This Tuesday and Friday right here. Santa Claus rally off to a beautiful start. Right? Off to a beautiful start. And then we started this week right here. Right? We started this week right here. And if we look here, after Monday, who can tell me what direction we was looking after Monday? Were we looking up or down after Monday? Were we looking up or down? Because we started out last week talking about looking for the possibility of a Santa Claus rally. Everything was looking good for the Santa Claus rally. We were bullish, yada, yada, yada. After Monday's trading, were we bullish or bearish on price action?
We were bearish because we felt failure swing to get back up to any high. So I say bearish.
Yes. And we was like, healthy price action will be to come down here and sweep this little quick, because we was talking about takeoff. We was talking about the rocket. Get the rocket fuel to continue forward later. Right? So after that, we were looking down. Right? After that, we were looking down. After Monday's trading. So this is what we started out Monday right here. Right? This is what we started out Monday. And this is what we started out Tuesday. Right there. All right, so we started Monday here, and Monday gave us this price action, and we closed here. All right, so from this point on, right, be it talking about the weekly low, right, from this point on, be it talking about this weekly low, because we said a healthy price action would be to take this out, right? Or last night when we was over here and we was talking about coming up to a certain point to a minimum before any type of deeper retracement down. Right? Only thing we're doing was looking for reasons to sell. Ever since that point right there. And why is that? Because the signatures deemed it so. Right? The signatures deemed it so. Right? Personally, right? Personally, I traded Monday. And then after Monday, right, it was uber clear what I was supposed to be doing. Right? I traded Monday, but after Monday, it was uber clear what I was supposed to be doing. Who remember Monday trading? Who remember my trading on Monday? Who remember that?
Me?
How was my Monday trading?
You said it was
You
a
didn't
little
like
bit
it?
difficult, but it ended off well.
Yeah, but it was more than a little bit difficult. What I say about Monday trading? What did I say about Monday trading? Somebody tell me what I said about Monday trading. It's more than not the best. What Monday trading? I felt like Jake Paul after I fight with that real boxer.
Oh yeah, you said it hits you up upside the head, your shoulders, and your neck.
I was beat up, bloody. I managed to get out in the green, but I was beat up, bloody. Right? I was like, I don't know if it was the cobweb. I had a 40% win rate. Yep. I don't know if it was the cobwebs. I don't know if I was stuck in my bias because I was thinking about a Santa Claus rally. I don't know what was going on, but I was bloody. But after Monday, we was looking down. We were looking down because the algorithm had showed us. Because remember when we was doing the price action recap, I said in hindsight, in hindsight, it's very clear what was going on. And we talked about that. Go back and look at the live stream if you want to, because I said in hindsight, it's very clear what was going on. After that 40% bloody day, well, I ain't gonna say bloody day, because I managed to get back in the green because of proper risk management, right? I was 40% on the day, but proper risk management ended the day green, right? But looking at it I said in hindsight, it's clear what we was doing, right? Because this is Monday here, right there, and this is Tuesday on, right? Come here, squash this up. Right there. That's Monday. This is Tuesday. This right here is Wednesday. And this is today. Thursday was a holiday. Right?
So Monday we made a high of the week, huh?
Yes, we made the high of the week on Monday this week. Right? So we made the high of the week on Monday this week. But after Monday, the direction was clear on what we were doing. And why is that? Right, let's go in and inspect it. Okay. So we come here. We did all right. We did our loop-de-loo during the Santa Claus rally. We talked about this was Santa Claus rally. This was last week's trading. Right. Going up there. Okay. Get on there. Oh, it is on there. All right. And y'all know, right? You know what I tell you to do for clarification's sake, right? Right. Put it to where you're looking for your opportunities. Right? So once we make that high or low, right, we're looking for opportunities in the future, right? In the future at these quadrants right there. Okay. Now, this is when we opened up on this week. Right. Let's highlight Monday's price action. All right. So that's Monday's price action highlighted. All right. So we open up on Monday. Right. We trade up here. Right. Once we trade up there, right, we fail to take out that high right there. Right. That's our PM high. It's our PM high for Friday. Yeah, that's our PM high for Friday. All right. We open up. Right. We opened up right here. We drop down, swept out our PM low, traded up, failed to take out the PM high, and then we dumped down and took out our new low that we had just set, right? Creating a balanced price range, bearish fair value gap, right? Traded up into that balanced price range. Then we proceeded to start coming down. We're not going to look at every PD rate, but what I want us to pay attention to is, right? What I want us to pay attention to is, okay, we come down here, right? You notice here, we create a SIBI right here on that quadrant. Then we get some very sloppy price action and we overshoot it, right? Now, at first look, you say, hey, we got this sloppy price action and we overshooting this PD rate. That's true, right? That's very true. Okay. But this right here is our first PD array that we create as we're displacing away. If price is bullish, right, it will use this as an inversion fair value gap. But price is unwilling to breach consequent encroachment of that what is a suspension block. All right. A suspension block. Price is unwilling to get above. It did poke above, but it didn't trade above, close above consequent encroachment of that suspension block. Right. So yes, we got sloppy price action, right? When we're leaving this range, right? But what are we trading back up into when we come inside of this bearish fair value gap and balanced price range? What is this right here? What is that right there? Who know what it is? Somebody tell me what this is right here. There you go. An inversion fair value gap. Right there. An inversion fair value gap. Right there. So that inversion fair value gap right there on a 730 candle Right? That inversion fair value got right there on that 730 candle, right there. We trade back up. Oh my God. Y'all ain't gonna believe what I just noticed. Y'all ain't gonna believe what I just noticed. When we drop down right here and trade below that low and wick back up right there, what is that right there? What kind of entry is that right there? Is that not a turtle soup buy right there below that low? Right. And then we come out of there and we displace away. Right. Is that not the first presentation? Because we got displacement outside of this range with the BISI, right? Isn't that a first presentation right there? Yeah, we got a small imbalance in there, but we're still inside of the range. How do Micah teach us to look for first presentations? With displacement leaving a range. Not only is it the first BISI created before coming above this high right here, right? It's the first presentation after a turtle soup. And then we drop down here. Now that it's the first BISI before taking out that and coming down, getting this change in the state delivery. So now we're anticipating that to act as an inversion fair value gap. So at first glance, right, we see we got a SIBI created on this upper quadrant. And we say, hey, we got sloppy price action trading above the SIBI that's on the quadrant right there. I want to short that. But truly, we just came back up to that inversion fair value gap right there. And once we hit that inversion fair value gap, we drop down, displaced away, traded back up into that SIBI, right? And then as we came down here, right, we created another SIBI there, right? Then we say, hey, we got all this sloppy price action. We keep overshooting these SIBIs and these PD arrays. We keep overshooting them. Right? What did I tell y'all? If it's a small or large range, what can we do? From here to here, let's just say that's an 82-point range. That's a fairly decent size, right? That's a fairly decent size. So even if it's a small range, what can we do? But especially if it's a big range, a large range, what can we do with larger ranges?
Put the quadrants on.
There you go. It's just something about that old magical Fibonacci tool, right? So we're going to come here and stretch this out like this. Put that there, just like that. Boop. Now when we look at this, right, the price action don't seem so random anymore. Right? It doesn't seem so random anymore. When we drop down right here, right, we got a SIBI that's in conjunction with that upper quadrant that we trade up into and drop down, right? We have a bearish order block and a very small SIBI that's in conjunction with equilibrium. The bearish order block is in conjunction with the lower quadrant also. We have a SIBI right here in conjunction with the lower quadrant. So as we trade back up with this long, crazy blast off at 9:30 in the morning, right? We're coming above buy side liquidity there, taking all that out. We wick up here above a short-term high and into a very small fair value gap right there, right? We touch the wick of a bearish order block that's resting in between these quadrant levels right here. And then the wick rallies all the way back down, right? Respecting that civvy, that's in line with that lower quadrant right there. And then the next candle opens up and barely pokes up and then drops down, right, outside of this quadrant section right here, right? So even when price just looks like it's just doing something super random, the algorithm has a plan and it knows exactly what it's doing, right? So after getting beat across the head and shoulders on Monday, right, and then going back and studying Monday's price action, right, it was clear that the price action was in a very strong sale program, very strong sale program. And that's why after Monday, right, after Monday closed and we was doing our price action recap, we were looking down, looking for reasons to sell in a premium, right? All week long, just been looking for reasons to sell in the premium, right? Because we said that was Monday, this was Tuesday, and then here it is, Wednesday, right? Wednesday, before we ever engaged with the low, right? So it was Wednesday before we ever engaged with the low. And then, so after Monday, we're looking down. Tuesday, really didn't get any good selling opportunities, right? This is Tuesday's price action right here. Didn't get any good selling opportunities. Okay. Then Wednesday, got good selling opportunities right here. Right. Went down. Then so now coming into Friday, right? Coming into Friday, looking for a deeper dig below that low right there. Right? Looking for a deeper dig below that low right there. And why was I looking for a deeper dig below that low? Right? We closed that on Friday. Right? The algorithm was in a hurry to get somewhere and it just ran out of time. Right? It was in a hurry to get somewhere and it just ran out of time right there. Right? So since it was in a hurry to get somewhere, okay, from 2 o'clock, let's just say 1:30, from 1:30 on Wednesday up until 6 o'clock, up until 5 o'clock on Wednesday, how many opportunities was afforded to get short after this drop right here? None. Didn't have any opportunity to participate in this after that trade back up and that drop, right? So for the afternoon session, we went up and then we just dropped. The afternoon session did not get any opportunity to explore lower. That's why we were looking for a price to come back to a premium to give an opportunity for a deeper retracement. So my last night on the pop-up was like, we're looking for price to come to at least here before any type of retracement. But it can also take out this and keep going down because that high on an hourly time frame does not invalidate the sale program. Right. That's why it's important to understand price delivery and order flow. Price delivery and order flow. That's all I got, man. That's all I got. Hopefully y'all got something out of this. We sprinting now, man. We sprinting. Training wheels are off. Training wheels are off. Full
Were you
steam
go-
ahead.
were you gonna do a watch party for them other two videos?
Yeah, we can look at one of them. Yeah, well, let me see. Let me see how long is it.
The one today wasn't that long.
The one from the day wasn't that long.
Maybe maybe a little less than an hour.
All right, let me see. Michael in Circle Trader. It was a live stream from today. Did he go? Oh, he streamed live. Okay, 57 minutes. Then the one from yesterday, 55 minutes. Vision to execution. And then today, Smart Money Concepts lecture. All right. Since I kind of started listening to the other one, I don't feel like rewinding that back. So we'll watch the one from today. If you feel like watching it with me, just hang out for a second. I'm drink me some water, go use the bathroom, and then I'm gonna play it. I'm gonna end the YouTube, but I'm gonna stay in the Zoom. So if you want to watch it, just stay inside the Zoom. For everybody else, hey man, hopefully you got something out of this, man. If it's your first time watching Tim's Tidbits, you probably ain't here no more because we've been on here for a long time. But if you're still here, I thank you. Consider subscribing, hit the like button, share it with somebody who you think might get something out of this. For everybody else, man, hopefully you had a good week. If you had a good week, congratulations. If you didn't have a good week, hopefully you learned a lot of good lessons. Congratulations. The next time I decide to get on Algo's internet and share my thoughts on this thing they call price action, man, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Y'all stay safe out here in these trading streets, man. Gone.